Energy demand is set to soar. 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, Netflix closed out 2024 with a bang, delivering record quarter thanks to live sports and Squid Game.
All in on artificial intelligence. President Trump announces a $100 billion AI deal with SoftBank, OpenAI, and Oracle.
And speaking of Oracle, Trump says he'd be open to Larry Ellison or Elon Musk buying TikTok if they team up with the government. More ahead on the growing list of potential bidders, including one Mr. Beast. We'll get into it, but let's take a look at where markets are trading because we have another rally on our hands, at least in the pre-market. You can see the S&P 500. We closed above 6,000 yesterday. We're set to add right now about 0.6%. All the action is in big tech. You think about what Netflix is doing. You think about what Oracle is doing, and add it all together. The NASDAQ 100 up about 1% pre-market. A little bit of a bid in the bond market, just a little bit. You can see the 10-year Treasury yield currently down about 1 to 2 basis points. We are below 460, and it feels like we're just talking about the stock market today, though.
Yeah, well, I'm looking and really focusing on energy demand because over the last 30 years, it really hasn't changed much, even with the proliferation of the internet. However, we're seeing Vistra here in white outperform other stocks like Nvidia here in blue or Supermicrocomputer in yellow as energy demand is expected to take off, possibly up 20% over the next decade. That's what is powering these energy-producing stocks.
It's blowing my mind. Population stagnant to lower, but energy demand rising by that much. It's a lot to talk about, but energy, AI, financials, it's all doing well today. Here are some stocks we're watching. Netflix up almost 15% pre-market. Just bang out earnings here. Almost 19 million customers in the fourth quarter, the biggest quarterly subscriber gain in history. United Airlines also on a tear this morning, up 5%, capitalizing on unusually strong demand for premium and international travel. It expects first quarter profits to exceed Wall Street estimates. Also watching Johnson & Johnson on an earnings day, but it's down about 2.4% despite an earnings beat. Revenue increased 20% from the previous year, but guidance for 2025 has investors a little on edge. We're going to discuss that with the CFO next hour. Checking in also on AI-related stocks after OpenAI, Oracle, SoftBank. We've been talking about it. They announced that pact to build out AI infrastructure in the U.S. They call it Stargate. They plan to invest up to $500 billion in the coming years, and you can see Oracle leading the way here, up almost 10% pre-market. SoftBank, though, up more than 11%. The Japanese giant here. Microsoft also rising in synchrony, up more than 2%, Matt.
You know, it's interesting. A lot of people talking about the fact that Oracle feels very old economy. Certainly not among the hyperscalers that we talk about these days. You know, Microsoft, Amazon with AWS, Google, Alphabet. And yet, Oracle stock over the last 5 years has outperformed all of those other hyperscalers. So I think it's interesting to see Larry Ellison at the table with Masayoshi Son, which is also very interesting. And what's the guy's name? Sam Altman.
I'm obsessed with this story.
Not Elon Musk.
On so many different levels. Of course, we're talking about big numbers, so that in and of itself is exciting. But let's talk about the palace intrigue a little bit. You think about Elon Musk, so heavily involved with the Trump administration. He despises Sam Altman. I think it is safe to say that. Of course, they have a feud going back to the founding of OpenAI, which he co-founded with Sam Altman and others in 2015. He's called him untrustworthy, among other things. He's sued OpenAI. And now you see, of course, Trump really brokering this partnership among them. And there's a lot of questions about where the funding is going to come. Elon Musk has raised those questions himself on X, of course, saying that when it comes to SoftBank, SoftBank has well under $10 billion secured. And he says, I have that on good authority. So where the money is coming from is a big question,
SoftBank, and then, of course, an Abu Dhabi investment firm as well. My question is, when Trump was entering office, there was a big concern about foreign investment in the United States. You couldn't have a Japanese steel giant buy a U.S. steel giant, but you can have a Japanese tech giant enter another critical area of investment for the United States. So where does the line stop and start is for foreign direct investment is what my question is.
These are both, I think, valid points. And then the question of how new really is this, which Stephanie Guild from Robinhood brought up. We're going to bring her on in just a moment. But I want to discuss the potentially $500 billion AI investment with Mandeep Singh of Bloomberg Intelligence. Is that a real number, Mandeep?
I mean, I look at it in the context of what the hyperscalers invested in their capex last year, and that was close to $240 billion. So from that standpoint, you know, an incremental $100 billion this year, and all the hyperscalers will be increasing their capex by at least 25 to 30%. We're talking about some big numbers here, and all to increase the compute capacity for AI. So when it comes to the scaling laws, I mean, this is really where the puck is headed, and I think OpenAI, being the part of the partnership, clearly has an advantage now because they have all this compute capacity for training the next version of their models. And I think the other ones that are not in the partnership are at a slight disadvantage, whether it's Anthropic or Google Gemini or Meta Llama. So clearly, this does have implications when it comes to the foundational model companies.
Or xAI, which of course is Elon Musk's AI company. I'm sure he's not too thrilled about that one either. I do want to talk a little bit more about funding here, and it goes along with Matt's question of whether or not we're talking about real numbers, because you consider SoftBank, the expectation SoftBank may have to put up around $25 billion to $30 billion for its share of this particular project. At the end of September, they had about $25 billion in cash on hand. Of course, they can issue bonds and stuff to raise that cash, but that also comes potentially at the cost of higher yields on those bonds. I mean, when you think about also the deployment here, is there enough spots to actually spend this on in the time frame that they're talking about? Because this project says it's going to start investing immediately here.
Yeah, so I'm sure they can figure out, some sites that are ready immediately, and obviously this is going to be invested over 4 years. The more important thing here is, NVIDIA talked about sovereign AI as a big buyer of their chips last year, almost, $11 to $15 billion of their data center revenue. To me, this is a form of a sovereign buyer emerging, and sovereign buyer here in the United States, because that's how, SoftBank is going to raise the funding. So clearly, I think a lot of that money is going to go to NVIDIA and all the suppliers of these chips. And look, everyone was thinking of a slight deceleration in capex this year because of the law of large numbers. Looks like we'll have another year of 40 to 45% capex growth if you count the $100 billion coming out of this target project.
Mandeep, thank you so very much for your time, for your analysis. That is Bloomberg Intelligence Senior Analyst Mandeep Singh. Joining us now, Stephanie Guild. We promised you her, Robinhood Financial Head of Investment Strategy. Want to keep the train running here on the AI theme. Matt earlier was talking about the energy needs that are going to be required to really make these data centers run, keep them cool. What do you think this means for investment opportunities, especially when we've already seen such a big run-up in the stocks of Vistra and Constellation, for example?
I mean, it's got to keep going. Like, if you just look at the pure number and the data needs, like one single hyperscaler data center needs like 1.5 gigawatts of energy. A nuclear power plant can give you like 1, maybe some of them give you 3 gigawatts of energy. So it's really like we're going to need a lot of gigawatts of energy. And the thing is that we're going to have to keep building. And that's where I think the infrastructure play is going to have to come into. We've got something like a need. The expectation is something like 30 up to 34 nuclear power plants to be able to do this. And even in emerging economies where the last few that were built, it took them 6 years to build. So I'm sort of like, this is a thing that we're going to really have to focus on. The last time one was built in the United States, it took 17 years and was double the budget of the expectation. Yep.
Yeah, it's tough. Every time I hear someone talk about bringing nuclear energy online, I kind of giggle a little bit because it's not going to be as easy as just saying it. Still, I got giddy yesterday watching this press conference. I'm easily swayed, but they just sold me on the growth, picture here, the promise of investment and return. How do you invest in that? I mean, how are your clients investing in that?
A public-private partnership is certainly something that I'm personally supportive of, and I think we've long missed that generally in the United States. Our clients have continued to invest in the big tech companies, and I think we've had the view, or I've had the view, that mid-cap companies should do well, and I still think that's true because I think our GDP is going to continue to grow, and things like this are going to continue to boost it. GDP now is expected at 3%, and that's well above what it's been the last decade plus. And I think that will continue. But I think you also can't count out the big tech companies because they have a lot of clout in this administration.
I have to say, I am so interested to see what OpenAI's next valuation is, and its next valuation round should be fascinating here.
It was only 150 billion last time, right? I felt like that was a little, yeah, exactly.
Yeah, I think that number is on its way up. But this partnership is interesting because it's all about infrastructure, and it seems like if you take a look at where investors are putting money right now, it's still behind the infrastructure portion. Do you think it's too early to look at applications of AI and who might be beneficiaries there?
I mean, well, I think energy companies, utility companies and things like that have also benefited from it, from an infrastructure perspective. But is it too early? Depends on your time horizon. If you have a long time horizon, no. I do think places like healthcare, which have been pretty beaten up, should eventually benefit from things like this. And that's certainly, like Larry Ellison has talked about that quite a bit, and his focus of having AI help cancer, for example.
I loved that. That was my favorite part, using this massive database to solve cancer.
Well, when you start getting into healthcare, you start to have real-world uses, too, and not just kind of pie-in-the-sky thoughts about how to figure out what flight you're going to...
It's a big point of conversation at the JP Morgan Healthcare Conference. How do you use these AI tools?
I was charting energy demand on ChatGPT this morning.
Were you?
Yeah.
To that end, do you think that there are places that are still underpriced in this market if you're trying to look for a solid AI trade?
Solid AI trade. Depends on what your earnings expectations are. They're already pretty high.
You have CRM, right? You have Salesforce.
Yeah.
Is that a stock you like?
Yeah, CRM is a stock that we like. We have a focus on growth at the right price, and CRM is part of that. They have been a little slower in terms of talking about AI, but they have their agent force, I think it's called. And the stock itself is only priced at 29 times next 12-month earnings, which is not that expensive compared to some of the expectations of other large cap companies. So yes, that's it. But I also have other areas that are not tech-based that I think are undervalued. And mid-caps in general have been undervalued, and they have been outperforming.
You like the Gap, for example, and it's trading at 11 times earnings.
I do. I mean, I just think it's a turnaround story, at least for right now. It's close to 11 times next 12 months. The CEO was put in place in 2023, is starting to improve things, paying down debt. They have Zach Posen, who's looking to improve their product.
Hot star. Yep. Katie, are you an Athleta person?
I love Athleta, I gotta say. At 86th Street, there's a Lululemon, and then there's an Athleta, and I wonder if the crews ever fight each other.
I go to both.
I was going to say, I guarantee you go to both.
No, I do. I breeze through both, and then I see who has the cheaper leggings.
And then I go buy myself some, Magnolia down the street?
There you go.
Some cookies to balance it out. I like that. Stephanie, great having you in. We have to have you back because we didn't get to talk about, you mentioned the Fed paper in your notes, and I got deep into it this morning. So really appreciate
that.
Keep
everything in check.
Stephanie Guild there of Robinhood Financial. Coming up, Netflix surges on a record quarter. We'll take a look at how they did it next. This is Bloomberg. Let's get out of high interest, a look at what's making headlines around the world. Migrant communities in cities across the country are bracing for the mass deportations pledged by President Trump. The president has issued new orders, including giving immigration agents the power to enter churches and schools. Trump has also reinstated the Remain in Mexico policy and announced plans to restrict birthright citizenship. The president has pardoned a number of people, including Ross Ulbricht, who was serving a life sentence in prison for founding the Silk Road Marketplace. Ulbricht had been jailed back in 2015 for running the dark web, where illegal drugs and hacker tools were sold using virtual or cryptocurrencies. In its 2 years in operation, more than $200 million worth of illicit activity flowed through the site, according to the Department of Justice. And a lot of bad stuff happened on that Silk Road site. Federal employees in diversity, equity, and inclusion roles are being placed on paid leave today as offices related to those DEI programs are being ordered to shut down following President Trump's executive orders. Agencies will be given a week to submit a written plan for removing those employees from the federal workforce. In a separate order, the administration moved to limit diversity preferences in federal contracting. Katie?
All right, in other news, one stock we're keeping a close eye on this morning, of course, is Netflix. The streaming giant ending the year with its biggest quarterly subscriber gain in history. That, of course, was boosted by live sports, the return of Squid Game. It added in total nearly 19 million customers in the fourth quarter. Here with more is Geetha Ranganathan of Bloomberg Intelligence. Let's talk about where all of these people are coming from. Of course, I know that live sports has to be a big part of the story, but we're talking about 18.9 million subscribers. That is double Wall Street expectations. That's more than what we saw during the pandemic, Geetha.
Yeah, it was absolutely a record-breaking quarter, Katie, for Netflix, and a record-breaking year. I mean, they added through the year, they added over 41 million subscribers. That's, just to put that in context, that's more than the total subscriber base of Peacock, for instance, which has 36 million subscribers. So just absolutely mammoth numbers from Netflix. And if you're just kind of looking at the territories, right, from a regional perspective, it was really broad-based. It was across all geographies. We saw a lot of strength in the U.S. markets, almost 4 to 5 million new subscriber adds on the back of those, sporting events, the big live event strategy, but then across the entire, world as well, with that ad tier kind of really driving 55% of signups in all of the countries where it's present.
I'm curious also about some of these newer projects, and you're seeing over here just a stunning level for Netflix stock at $1,000 per share. What does it mean for them to have this much success in live programming like sports? At the end of the day, what does it mean about the growth rate, about the dollars that they could bring in the door?
Yeah, what they, along with that subscriber momentum, Sonali, they also, basically spoke about price increases. And what that does is it gives us a lot of visibility into revenue growth. So remember, they're moving away from disclosing subscriber metrics. So the two main metrics that everybody's going to focus on going forward is really going to be revenue growth, double-digit revenue growth, and then, of course, operating income growth and operating margin. We have a lot of visibility into revenue growth going into 2025, just kind of given that subscriber momentum, given the price increases that they just announced. And then as you get into 2026, they have new levers that they can pull. Advertising is still really in the ramp up stage and is going to be a meaningful driver getting into 2026. So just, multiple catalysts all over the place. And basically the report just kind of totally blowing up the bear case to pieces, I would say.
Katie brings up an interesting point that a lot of people maybe subscribe to free trials to see events. Netflix they did horrible in terms of their event with Mike Tyson and the YouTuber
rough
guy.
Yeah, Jake Paul.
It just the feed kept breaking. But for example, I subscribed to Fubo last week so I could watch the Ohio State University win the national championship against Notre Dame, and then immediately canceled my subscription after. Does Netflix have any issues with that, people just signing up and then ghosting them after?
Yeah, burn and churn, Matt, is always a problem for most, streamers out there. I think I would say Netflix really should not have that problem. And the reason I say that is because, yes, they do have these big splashy events like, the NFL games, like that Jake Paul match, which are big subscriber acquisition events. But then they have a steady slate of content hits coming through the year, which is going to guarantee subscriber retention. So if you look at WWE programming, which started in 2025, again, that's week in and week out programming. So you do have subscribers coming back to the service. And then as you just look at the content slate, even without the sports strategy, you look at the scripted content through 2025. I mean, it's just one hit after the other. All of their biggest series returning, whether, it's The Night Agent, whether it's You, whether it's Stranger Things, Wednesday. I mean, this is arguably one of their best content pipelines in the history of their service. So they are definitely not going to see a big problem with churn.
These grown men in spandex pretending to wrestle with each other, getting all sweaty and slapping up. What is it?
People
What is
wear
that?
spandex for all sorts of types of wrestling.
I will say, we know that wrestling appeals to at least one of our producers, so maybe we can interview him after the show.
Joe? Is he really into wrestling, or does he just know about it?
No, I think he's super into it.
I guess there's a match for everybody out there.
They're sure. Hey, listen, if I got into college football for you, I'm sure that you can understand why other people like to watch whatever we're watching on screen right now. Anyways, Geetha, we thank you so very much. Geetha Ranganathan of Bloomberg Intelligence. Now, coming up in the next hour, we're going to be live at the World Economic Forum in Davos, and we're going to hear about AI investment with Blackrock's Larry Fink and Marc Benioff of Salesforce. Stick with us. This is Bloomberg.
All right, welcome back to Bloomberg's Open Interest. You're taking a look at the stock market right now. Minutes before those opening bells ring, you can see the S&P 500 up by about 0.5%. The action today is in big tech. Of course, a lot of focus on AI, a lot of focus on Netflix as well. You can see the Nasdaq 100 up about 0.9%. The Russell 2000 down a little bit on the day, about 0.2%, but we're going right back to big tech. Netflix trading about $1,000 per share in the pre-market, a little bit below that right now, but still up double digits and then some. A lot of that is coming, of course, from that subscriber blowout that we learned about last night. 18.9 million subscribers added in the previous quarter. That is more than double street expectations. But what grinds my gears, you guys, is the fact that this is the last time that we'll get quarterly subscriber numbers. Management wants investors to focus more on sales, on profits, less on subscriptions, which seems a little counterintuitive to me. That's what we care about.
But are we looking at a little bit of a saturation? Like, doesn't everyone have Netflix? Who's left?
You could have made that argument until last night's earnings report, because somehow they found 19 million more people to subscribe.
The point that Rich Greenfield made about this idea of them kind of bringing in more ad dollars as well on top of all this, and the only ones really spending on content, it's like Geetha says, it's a vicious cycle. In the right way.
She also said, though, that the content slate is really strong right now. Apparently, people love Squid Game.
I don't understand. Unfortunately, I watched the whole first season and it was awful. Don't put yourself through it. Coming up less than 4 minutes to the opening bell, we'll discuss the market moves with iCapital's Anastasia Amoroso. This is Bloomberg. We are moments away from the start of the cash trade today after closing above 6,000 for the first time this year in yesterday's trade. We have futures that are up on the S&P and the Nasdaq, down on the Russell, but it's really enthusiasm for that big deal that President Trump announced yesterday with Masayoshi Son, Larry Ellison, and Sam Altman that's driving this trade today. You hear the opening bells on the Nasdaq and the New York Stock Exchange. Innovid ringing the bell on the New York Stock Exchange. I took a look at their stock. It's down 69% since the IPO 4 years ago, so that's not great. But you have Recursion ringing the bell on the Nasdaq marketplace. Their stock was down 31% last year. Guys, it was an up market. You got to keep up. We're looking at gains right now on the cash trade in terms of the major indexes. Katie Greifeld is standing by to tell you what they are. Katie?
Yeah, we have a lot to talk about here. We are knocking on the door of at least another intraday record high when it comes to the S&P 500, currently higher by about 0.5% just in the first 37 seconds of the trade. You can see the small caps down about 0.2%. I'm going out of order here because the big story is in big tech. You can see the Nasdaq 100 currently higher by about 0.9%. That was 1% in the pre-market, so cooling a little bit. But there is a lot of enthusiasm right now, both for that deal that Matt mentioned, of course, with AI, but also for Netflix, because Netflix added nearly 19 million customers in the fourth quarter. That was its biggest quarterly subscriber gain in history. It projects revenue of up to $44.5 billion for the entire year, and you add it together, shares are currently higher by about 12%. We did crack above $1,000 per share in the pre-market, coming back a little bit Sonali, but still a double-digit gain.
Definitely eyes out for Netflix 1,000. Also over here, eyes out for Oracle 200. Oracle is among tech stocks surging after announcing a pact with OpenAI and SoftBank to invest up to $500 billion over a number of years in U.S. AI infrastructure. The two-day gain in Oracle is pretty stunning right now. Oracle is up more than 8.7% as the market opens just under 190 a share, Matt.
All right, Procter & Gamble saw organic sales grow faster than expected last quarter. The results suggest that the era of endless price hikes may be ending, since most of P&G's growth in previous quarters was a result of inflation. So for now, that's pretty good news.
Yeah, we had 3 positive gainers at the 9:30 open. So there you have it. That's a sentiment check. Let's join in now Anastasia Amoroso. She is Chief Investment Strategist over at iCapital. Great to see you in person.
Great to see you, Katie.
So you think about where we stand, of course. Coming into this week, there was a lot of question marks about tariffs, of course, inflationary pressures, what the geopolitical landscape was going to look like. And now we're knocking on the door of a new record high. We're back above 6,000. Where do you sit right now when it comes to the mood music?
Right. Well, I don't think anybody, or somebody I'm sure, would have predicted that the first couple of days would bring with it a slew of AI announcements. I think most people were worried about tariffs, and the fact that we didn't get those tariff announcements, the fact that we really focused on pro-business rhetoric, on investment opportunity in the United States, that's what's lifting the mood. And look, I completely subscribe to that. I think, the setup for this administration has been on deregulation, on investment, on driving opportunity in the United States, and onshoring. And those are exactly the parts of the market that are really responding right now.
Another thing I'm watching is the fact that we are less than 20 points away from an all-time closing high right now. So we're back to almost near records on just day 3 of the Trump administration. When you look at where we stand right now, is it AI alone? What is going to be the productivity measure that really offsets any worries there are about any potential growth slowdowns? I can't believe I'm saying all of this out loud this fast when it comes to immigration and tariffs, because that fear is so ingrained in so many investors right now.
Right. Well, first of all, I don't think it's just AI. We'll kind of circle back and talk about that. But I think it is about the U.S. economy that came into the year on very solid footing. It came into the year with strong good unemployment rate, with strong employment, strong wage growth, and the consumer that, we had that retail sales number last week, which was really a positive one, and the consumption strength is set to carry over into 2025. So I would say that's one thing that's really supporting the market and the economy. The other thing is we're in the midst of the earnings season, and, we talked about, Matt, last week, the financials earnings were blockbuster. The overall earnings season is really strong. We've got 79% of the companies that are surprising to the upside. The average beat is about 9%. So that's really, really solid. So I would say that's happening in the backdrop. And then you add on top of that the new administration that seems to be incredibly supportive for everybody's favorite themes, like AI, like crypto. And, that's why you get this very buoyant response in the market.
So you say it's not just AI. What about, for example, monetary policy? You mentioned economic demand. Like, what is the thing that's pushed us up 25% 2 years in a row and has us up again now?
Right. Well, the big thing that pushed us up is the fact that we've seen inflation relief. You remember going into 2024, I forget what inflation numbers were, which was maybe a good thing, but let's say it was 4%. We're now looking at 2.8% core PC inflation.
CPI, by the way, peaked at more than 9%.
That's right.
Which was rough year over year.
Yeah, and the fact that we managed to bring that down, and we now have the Fed that has all this leeway, or not all this leeway anyway, but let's say another 100 basis points of rate cuts if they so choose to get us to neutral rate, real neutral rate. That's what's really been supporting the market. But that is more of a 2024 story, I would say. Right. 2025 is really about, Sonali mentioned productivity growth is, we have a resilient economy. We also have an economy that is experiencing a productivity boom. And it started back in 2020 amidst COVID and all the tech investments that have been made. It is continuing with AI today. Matt, you mentioned, I think in the segment before, what an avid user you are of ChatGPT. And it's more and more people that are using that for more and more tasks. And, that productivity boost is real. It is here to stay. And I think it's really just getting started.
I want to talk about how earnings factors in, because we were talking about this with Lori Calvasina yesterday. You take a look at earnings revisions momentum right now. It's negative. We haven't seen that in quite a while. How are you thinking about heading into earnings? And that stat in particular, should that make you a little bit bearish here, or are we just resetting expectations lower?
I think we're starting from a pretty low bar, I would say. First of all, if you looked into the quarter, I think expectations were for 14% year-over-year earnings growth. The bar got reset lower to about 11%, and I think we're pacing about 12% today. So we're actually doing a little bit better relative to the bar that was reset lower. The other measure that I like to look at is the earnings revisions ratio, which shows the number of upgrades versus the number of downgrades, and that ratio has actually been low, but to me, there's upside to that. If central bank policy worldwide actually goes into a net easing mode, that should support the economy. So I see upside revision potential for those earnings. And of course, if the Trump administration delivers on perhaps the growth acceleration mandate, that too could provide further upside.
You know, we've been talking about the Trump administration all day today,
No kidding.
believe it or not.
Last 3 days.
Bloomberg Economics has a really
100 days.
cool, Bloomberg Economics models the drivers of different things. And we've got the S&P 500 loaded up here. And I was surprised to see that in terms of drivers for the index, monetary policy was really low. It's in the yellow there. Blue is economic demand.
I don't see how that could be possible.
Gray is economic supply. We'll ask Anna Wong for you, but not right now. And then pink is risk sentiment. That's the animal spirits. And I feel like that's a huge part of this, especially at, 24 times earnings. How important is that?
Look, it's very important. And first of all, to comment briefly on the monetary policy, I think you're right. It has taken a back seat to the animal spirits, to deregulation, to capital markets activity. And maybe that's okay, because we have delivered 100 basis points worth of rate relief already. Let that filter through the economy. Let that take the pain off the pockets of the economy that we're feeling it the most. So that's a positive. But the animal spirits is a big part of the reason why the CEO confidence has recovered. And that has a positive feedback loop to capital markets activity, and the fact that most people expect a rebound of 25% in M&A and a rebound in IPO markets. And that, I guess that becomes a self-fulfilling prophecy at one point.
Yes.
If you expect things to be good, you might want to issue that IPO, and that feeds on itself.
It's interesting. Those are the big Wall Street businesses when it comes to IPOs. You were talking about the blowout earnings last week from the big banks, but even this morning, I want to point out Ally Financial as well and Interactive Brokers, because it's showing you even a broadening of the financials trade.
Yeah.
The fact that Ally could still be so promising, you're seeing the stock up more than 7% now. Interactive Brokers as well. The retail traders are alive and well too. Does this mean that we're out of the woods? Does that mean that the weakness you've seen in consumers that are lower income have maybe met the worst when it comes to potential provisioning for banks and for lenders out there, and can maybe start to contribute to the economy a little more in terms of spending?
I actually do think that. So, Sonali, when you look at the expectations for banks for overall financials, the expectations for capital market activity rebound are very high, and I think that will deliver. But if you look at the expectations for loan growth, if you look at the expectations for net interest margins, they're actually very, very low. But I do think that companies like you just mentioned may actually benefit from the consumer that's on solid footing, and that is able to take advantage of somewhat lower rates. So I do think we can see a rebound in lending activity, and if the Fed does another rate cut or two, that obviously improves the bank margins as well. So I agree with the broadening out trade in financials. And by the way, I would also say there's a broadening out trade in AI as well. And that investment that we talked about, the $500 billion, it's really telling that it's not just for semiconductors, it's for data centers, it's for the energy powering those data centers, it's for the interconnectivity that has to go into that. So I see a slew of beneficiaries from that as well.
Yeah, I think it's pretty exciting. I mean, you need plumbers, right?
You need a lot of electrical
equipment. You need cooling. You need water.
Right. You need all of the above. And that's why, speaking of broadening out, if you look at various AI baskets, it's not just the semis that have been doing well. Yesterday, for example, AI power has done really well. And that's utilities, it's independent power producers, it's all those mechanical components that go into it. So I think there's a lot to do there.
Got it.
Some jobs along the way.
Yeah, a lot of jobs. I wonder what the rates are going to be. Anastasia, thanks so much for joining us. Anastasia Amoroso there from iCapital. We're going to head back to Davos for an exclusive interview with Citi's head of wealth, Andy Sieg. Don't miss it. This is Bloomberg. Back in Davos, Bloomberg's Lisa Abramowitz is at the World Economic Forum with Citi Head of Wealth, Andy Sieg. Lisa?
Thank you so much, Matt. Yes, indeed, I am here at the foothills of the Alps with Andy Sieg, who heads wealth at Citigroup and who has been there now for about a year. A lot of transformations going and a renewed emphasis on wealth and building it out for Citi. How hard is it to get a competitive edge in a competitive field where everyone's vying for dollars?
Well, an incredibly competitive marketplace, but we have assets like no other. Beginning with the Citi brand, which soars around the world. Our client franchise is remarkable. It's been built over the course of many, many decades, and we've got great capabilities in the business. So to a certain extent, coming in as a leader, it's how do you shepherd this amazing set of assets to live up to Jane's ambition, which is this is a business we'd like to see become a leader, if not the leader, in global wealth management over the years ahead. One
big focus of Jane Fraser has been the idea of sustainable revenues, sustainable streams of capital. How do you decipher what's sustainable and what's sort of a market-related boom or a one-off opportunity? How do you really solidify?
Well, I mean, we're in the securities business in a large part of what we do, so we're naturally, part of the volatility, markets up and down. We try to be as diversified as we recommend to our clients, so we're diversified across underlying products and business activities. It's an investment business, a lending business, a banking business. We're diversified across segments of clients and across geographies. But the best way to offset that volatility is to have very strong organic growth in your business and to ensure that you're managing your business kind of within the growth that comes from that organic activity. So you don't get overextended in times when markets are particularly active.
What have been some of the biggest changes over the past year that you really can point to that you think are going to be what we're seeing, more of the same, that can kind of keep growing?
Well, I mean, I think that a big part of what I've landed on, I've met with more than 350 clients over the last year around the world. It's playing really to the strength of Citi, which this is not a wealth business that looks like many we compete with. It's almost singular in terms of a business that serves real change makers around the world. A client that might have made their money in Hong Kong, their kids are going to school in the US, they're thinking about buying a business in Europe. Citi is the perfect partner to serve their family around the world and to bring capabilities to the table that don't just help them manage wealth in a traditional sense, but really help them continue to focus on creating wealth. And that's why most of my meetings involve some Viz Raghavan, our head of banking, or someone on his team, Andy Morton, our head of global markets, or someone on his team, because our clients, they want to see us bring the full strength and global platform of Citi to bear in terms of their desire to continue to drive change.
At Davos this year, optimism really has been the word that everyone seems to be speaking. Enthusiasm, this animal spirits, this jubilance that deal making is going to happen. Is that matched by the risk appetite of some of your clients?
Well, I agree with what you said. Certainly within the U.S. I mean, this has been the president's speech on Monday, has definitely set corporate boardroom conversations heading in a much more risk-taking direction, because he's made it clear, the U.S. there's going to be less regulation in the U.S., an environment more conducive to business. That's not necessarily the case, everywhere around the world. So to a large extent, our job is going to be helping clients whose interests go across many geographies navigate this, this environment, which it's different in different parts of the world.
So how much are people just consolidating all of their assets into the U.S.? I mean, is that what you're seeing even from international clients, or are they looking for other places?
Well, I mean, the U.S. has soared as an equity market and, as a source of innovation that's fueling so much change around the world. So clients everywhere are focused on the U.S. There's a lot of our M&A practice is companies that are interested in investments in the U.S. So it's fueled our business. But I think there's also a sense that there may be areas of the world now that have real value and that are underlooked. And we've got companies and businesses in Western Europe, for example, that people haven't really stopped and looked at the price that they're trading at in the market today. So I think smart investors are, they do what smart investors usually do, which is, trying to be diversified, trying to see what's the next opportunity around the corner. And for some, those are places, outside the U.S.
One thing that Jane Fraser has talked a lot about is efficiencies, and there have been a lot of transformations in the wealth unit, and I'm wondering whether you're kind of at your core now, where you can just start to just build on what you've already created, or whether you expect more trimming around the edges.
Well, I mean, Jane and the board's expectation is we have a strategy that's very sustainable over time. So we did adjust the expense base in the business, but make no mistake, I mean, this is a growth strategy for Citi. So you described it very well. We've got our expense base down. We're in position to deliver to shareholders. We're going to stay focused on expenses over time, but we're going to try to make sure that we're prioritizing where our capital goes, where our expense base is deployed, using AI and other tools to bring automation into our business to let us move some of the headcount from, middle and back office functions to more of the front line of our business, as we like to say, advising clients and driving growth. And so, it's a continued focus like any business in being diligent about our expense base, but this is a growth strategy.
What do you think is going to be the biggest aspect of growth in this year?
Oh, I think technology is where you put your bet. The wealth creation that's taking place, not just in the U.S., in many corners of the world around technology, and the value that's being unlocked as companies are realizing the full potential that AI offers. I mean, I think there's going to be remarkable change in terms of the structures of companies and the quality of what we can do for our clients.
Andy Sieg, thank you so much for being with us. Andy Sieg, who is the head of wealth at Citi. Sonali, I'll send it back to you.
Lisa, thank you so very much. That is Lisa Abramowitz and Citigroup's head of wealth. You can watch all the Bloomberg interviews and panels from Davos by typing Live Go on your terminal. Now, coming up, who's going to own TikTok? We're going to discuss potential buyers, potential investors, and what a deal could look like next. On the Wall Street Beat, this is Bloomberg.
Are you open to Elon buying TikTok?
I would be if he wanted to buy it, yeah.
On your inauguration.
I'd like Larry to buy it too. I have the right to make a deal. So the deal I'm thinking about, Larry, let's negotiate in front of the media. The deal, I think, is this, and I've met with owners of TikTok, the big owners. It's worthless if it doesn't get a permit.
Time now for the Wall Street Beat. Deal makers everywhere are on watch because the president is going to step into decision making. President Trump yesterday saying that he supports Elon Musk or Larry Ellison taking over TikTok's U.S. operation. Other buyers are billionaire Frank McCourt and Shark Tank investor Kevin O'Leary, plus YouTube star Mr. Beast. And it's incredible because you also have ByteDance director Bill Ford telling Axios this morning that they're going to get on with it as soon as maybe the end of the week in terms of negotiating what might work. Incredible display here. There's a large field of the people who might enter, and it's showing you that being friends with the president will help you in terms of doing a deal that will require approval from the U.S. government.
Which probably isn't great. I mean, you wonder how open this bidding process actually is, whether this is a predetermined outcome. I mean, listening to President Trump's comments there, it seems like obviously he has a deal that he would like. We'll see what actually comes to fruition here. But
or he could just be talking, right? Because I've never heard Larry Ellison say that he's at all interested in buying TikTok. He just happened to be standing next to the president
he did smile
when the reporter asked the question.
Yeah.
I don't think Larry Ellison wants to buy TikTok.
Well, it would be nice to actually hear from Larry Ellison himself, but Trump would be open to it.
They're somewhat smaller
or
players.
Elon Musk, of course.
And, if you think about it, Elon Musk, fine, that's one large player, but there's smaller players here, too, that have been wanting to get involved. You think about reports just days ago from Perplexity AI.
Right.
If you're trying to make a deal of that size, do you stand a chance when you already have other much larger
none
players?
of them is as small as Kevin O'Leary, right? I mean,
But you can team up with people.
What is he?
How close is he
scraped
to
together
Trump?
like $20 million.
Isn't he
president.
Mr. Wonderful, right?
I just can't see him coming up with billions in financing, but who knows? It's all incredible speculation and so far from actually happening. Coming up in the next hour, Johnson & Johnson CFO joins the show. This is Bloomberg. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld.
And coming up, tech stocks power ahead as President Trump's massive AI push eclipses his tariff threats to China and Europe.
Artificial intelligence, top of mind this hour in Davos. We'll hear from Blackrock's Larry Fink and Salesforce CEO Marc Benioff.
And on the earnings front, J&J tops estimates as strong cancer drug sales offset the decline of an older blockbuster. We'll discuss with the CFO, Joe Wolk, in just a moment. But let's take a quick check on these markets right now. You can see that rally extending when it comes to the S&P 500, nearing 6,100 on the big benchmark there, knocking on the door of a new record high. A lot of that enthusiasm is being led by the tech sector, by Netflix, by Oracle in particular. And you can see the NASDAQ 100, tech-heavy, up about 1.4%. The bond market, very quiet today. We'll see how long that lasts, but 10-year Treasury yields at this moment unchanged. Now let's turn our focus to earnings. Let's take a look specifically at Johnson & Johnson. The company reported fourth quarter earnings that beat expectations this morning, but the stock is falling and then some. There's a lot of speculation about why shares are down almost 4% right now. That is the biggest decline intraday since 2023. So let's bring in now CFO Joe Wolk and some of the reasons that have been named, Joe, for why we're seeing this decline in the shares is maybe it's the med tech unit falling a little bit short of expectations. Maybe it's the sell side not being too good when it comes to Forex changes.
Yeah, good morning, Katie. It's a pleasure to be with you and the team here at Bloomberg. It is a little frustrating for me as the CFO to see the stock decline when we come out with yet another quarter of beating expectations on the top and bottom line. But I think you have hit on it with respect to 2025 expectations. Only about, actually less than half of the analysts updated their models for the strong appreciation of the U.S. dollar versus other worldwide currencies. That has about a $1.7 billion impact on our reported top-line results and about a 25-cent impact on our EPS. On top line, I do think that miss is having some influence in the market right now. On bottom line, we still met, even though they had that error in their models going forward. So it's really strong operational performance. And if you think about Johnson & Johnson, the breadth and depth of 26 products and platforms that generate more than $1 billion in revenue annually, it's enabling us to overcome multi-billion dollars of revenue hits this year related to Stelara erosion due to biosimilar competition here in the U.S., some Part D redesign, additional discounts and rebates going to some products, as well as a slower pace of growth in China for our medtech business. We're able to deliver 3% growth on the top line, almost 9% on the bottom line on an operational basis. Most companies would probably be contracting on both top and bottom line in that series of events. But I am very confident we've leaned in to the expectations for 2025, but we're very confident we can achieve it, and it'll really set us up for differentiated growth going forward in 26 and the balance of the decade.
Well, Joe, it's really interesting. I mean, we've been having this earnings conversation for a while now. When you think about your earnings over the past year have been pretty strong. Then you take a look at the share price down more than 12% over that time. What do you think the market is missing or underestimating when it comes to products, geographies, currently marketed drugs? What's missing here?
There are some assets in the pipeline that I think the street has undervalued. If you look at our offerings in lung cancer, Rybrevant is off to a very strong start. We're hopeful and planning for a subcutaneous formulation, which will be better administratively for patients as well as better tolerability. That has blockbuster potential. I think bladder cancer has the same. We're pleased to add the intercellular therapies business to our business in the coming months, assuming regulatory approval. And I think there's a couple things that when we speak with investors are on their mind. So we haven't lost investors within our top 100, but they haven't added positions. And they think about the Stelara erosion. They want to make sure it's on track. And from what I understand from all of them, it's not likely that investors jump in before the loss of exclusivity on a major product. The second one is the talc litigation. We are scheduled to go in front of the Southern District of Texas Bankruptcy Court on February 18th. As you know, Katie, we have more than secured at the time of the vote closing to present this plan, more than the required 75% required by bankruptcy code. And I can tell you in the months since that, that support has only grown numerically. So we think we're in very good position. So certainly don't want to get ahead of ourselves. And then there's health care overall. I think it's been a little bit down since the election, but there's very positive talk, I think, with respect to the new administration and President Trump himself commenting on the PBM middlemen, getting transparency of where these discounts and rebates are going. As we all know, more than 50 cents of every drug spend dollar is not going to the manufacturer or the innovator who actually put capital at risk for better health care.
I wonder about the currency issues. We've heard that, the stronger dollar could be a headwind. We always hear that when we see this kind of move. But how much of a problem is that? It's only up like 2 or 3% over the last year. It is up, I think, 17% from the end of 2020. How much do you think about that in your role as chief financial officer?
Yeah, that's a good question, Matt. We certainly don't look to offset it. It's something much, it's beyond our control, and this kind of goes in waves. So sometimes we get a benefit from it. Sometimes we have a little bit of a hurt, as we do for the 2025 guidance. So we try to manage the business responsibly on an operational basis, making sure that our market growth on the top line is above that of our competitive set, and then making sure at Johnson & Johnson that we grow commensurate or even a little bit better than the sales growth for earnings. And that's how we more or less think about it. We're not going to kind of chase a strengthening dollar, which may be a temporary moment in time, and forego what are really promising R&D programs that will benefit not only patients but our business.
Curious a little more, if you could double down on what you think will be the biggest change for Johnson & Johnson in this administration. You pointed to the price negotiations, the pharmacy benefit managers, and the approach the Trump administration would take to them. But what about other measures? Do you see, for example, M&A taking off in a way in this administration such that it could be a lever you use to catapult growth?
Yeah, that's a great question. I think if I think about the new administration, I think there's a lot of reason for optimism. They're pro-growth, they're pro-innovation, they're pro-business, and that's a very stark contrast to what we have experienced in recent years. And so we'll have to see what some of the legislation comes out. Obviously, M&A, I've heard the same type of rhetoric out there. It hasn't really stopped Johnson & Johnson. We did 2 acquisitions. Well, one was announced and one we did complete last May in Shockwave. And so it hasn't really stopped us, and it's finding those strategic businesses that create value for shareholders. There does seem to be more of an opportunity, though, given that the change in administration for additional M&A. At Johnson & Johnson, while those big deals make the headlines, we did really much more consistent with our playbook. 40 smaller deals that are great for value creation. They might be a little bit riskier, but when they pay off very big.
Yeah, of course. You think about that deal that was announced just a week or 2 ago at the start of the J.P. Morgan Healthcare Conference, Intracellular. You're buying that for about $14.6 billion. It sounds like what you're saying is that maybe we should be on the lookout for more M&A coming from J&J.
Again, I would say those deals, those larger size deals, that tends to be somewhat unique and somewhat of an outlier. We tend to focus on those smaller deals. It really comes down to a strategic fit. So we don't go into any given year or any given quarter saying we've got to get a certain number of deals done. Are we in a position to utilize our scientific expertise, our commercial capabilities of creating access for patients to create more value in our hands than where the asset currently resides? And if we can do that, that will tend to have us be very interested in making acquisitions. We've been very successful recently with Abiomed and Shockwave. They are both hitting their deal model, actually above the deal model, and the integration has been seamless. So we want to make sure when we do one, we do it particularly well.
Yesterday we heard Larry Ellison talk about some remarkably hopeful developments or forecasting remarkably hopeful developments in cancer research on AI. Have you used AI at Johnson & Johnson? Have you got any drugs in the pipeline that you've been able to develop with the help of AI?
Yeah, it's a great question, Matt. We're using AI, we're using machine learning. I would say it hasn't paid off with that home run bet of identifying new drug targets, but we can now take real-world evidence through blinded medical records, imaging and come up with solutions and get to clinical trials completion quicker. In medtech, we're re-imaging the heart in a 3D formulation that leads to less manual contouring during ablation procedures. And then at the corporate level, we have better accuracy with forecasting as well as just chatbots for employee services.
Joe, very sorry. We have to leave it there. We're coming against a hard break. We thank you so very much for your time this morning on the heels of a print that did beat estimations, but of course, facing some of those headwinds in the dollar like many companies right now are feeling. We're going to turn now to the World Economic Forum in Davos with an exclusive interview with Ukraine's President, Volodymyr Zelenskiy. Stick with us. This is Bloomberg.
It's great if we will have troops. But we have to understand that the troops will not be in the center of the capital. Yes. They will not have relaxed time. Yes, it's very important because I heard that some allies said that, yes, but it's okay, we can be in the center of some city, and no, we don't need such contingents. No. Yes, with our people, of course. Yes, because this means security, and that's it. So, but it can't be. It can't be without the United States. I will explain you why. Even if some European friends think that it can be, no, it will not be. First of all, nobody will risk without the United States. The second, that's what can divide NATO, divide EU and USA. That is a goal and dream of Putin, to divide this unity.
You mentioned China. How important is China in these negotiations? I mean, China is the backer of Russia. They seem to have had an impact on things like Putin not using nuclear weapons, those sort of things. Can China push Putin, and do you have any contact with the Chinese?
I had some contacts with Xi Jinping. We had a phone call during the war. Not too much, not enough, I think. Yes, he can push Putin to peace, I'm sure. I think that only President Trump is the strongest, and Xi Jinping. I think that there is no other allies who can really do it. Yes, because his economy, Putin's economy, after sanctions, after everything, depends very much on China.
You would like Donald Trump and Xi Jinping of China to work together to push
I think
push
yes.
Putin.
Yes, but not without us. It's important.
That was the president of Ukraine, Volodymyr Zelenskiy, speaking with Bloomberg's editor-in-chief, John Micklethwaite, in Davos. Later on today, John is going to speak with Argentina's president, Javier Milei. That's at 11 a.m. New York time. You can catch it on Bloomberg Television, on Bloomberg Radio, and on Bloomberg.com. Happening live right now at the Bloomberg House in Davos, a conversation with the CEO of Anthropic. You can follow that conversation on your Bloomberg terminal. Just type LIVE GO, live go, to hear from the CEO of Anthropic in Davos.
So there's a spectrum of risks here that we should analyze rationally and understand the trade-offs.
Let's focus on the upside. We talked about some of the geopolitical risks. You mentioned life extension and your kind of renewed.
Get to high interest now. Look at what's making headlines around the world. Migrant communities in cities across the country are bracing for the mass deportations pledged by President Trump. The president has issued new orders, including giving immigration agents the power to enter churches and schools, which apparently they couldn't do before. Trump has also reinstated the Remain in Mexico policy instead of just saying you're free to roam. And he's trying to restrict birthright citizenship with an executive order. The president also pardoned a number of people, 1,500 in the January 6th attack on the Capitol, as well as Ross Ulbricht, who was serving a life sentence in prison for the founding of the Silk Road Marketplace. Ulbricht was jailed back in 2015 for running the dark web marketplace where illegal drugs, hacker tools, and hitmen were sold using virtual or cryptocurrencies. In its 2 years in operation, more than $200 million worth of illicit activity flowed through the site. That doesn't seem like very much now, but it did then. This according to the Department of Justice. Federal employees in diversity, equity, and inclusion roles are being placed on paid leave today as offices related to those will be shut down following President Trump's executive orders. Agencies will be given a week to submit a written plan for removing those employees from the federal workforce. In a separate order, the administration moved to limit diversity preferences in federal contracting. Katie?
All right, well, happening right now at the World Economic Forum in Davos, Bloomberg's head of economics and government, Stephanie Flanders, is moderating a panel with the IMF's Gita Gopinath and others entitled Navigating the Fiscal Squeeze. You can follow along on Live Go on your Bloomberg terminal. But let's take a look right now at what's going on in this market where volume is about 25% above the 20-day trading average. You can see the S&P 500 currently higher by about 0.7%. All of the action is in the NASDAQ 100, up 1.5%. Your biggest gainers on a points contribution basis, you have, of course, Netflix up there, you have Oracle up there, but NVIDIA is your biggest contribution right now. You think about this AI venture that was announced. Of course, you have SoftBank and OpenAI are the lead partners in this venture, but ARM Holdings, Microsoft, and NVIDIA will provide technology along with Oracle and OpenAI. So all roads seem to lead back to NVIDIA, and you're seeing that in shares up about 4% today.
This is going to set the S&P to a fresh record high today. We are already on a record high basis from a closing high, and we are just points away from an intraday high. The AI euphoria bringing it back, but also those earnings under the surface were pretty good.
Yes. I mean, it's a little early to call a closing high, right?
A lot can happen
hours
between
away.
now and 4
As we know,
p.m.
a lot can happen
There's a
between
lot of
when
daylight.
Romaine gets on set. You know, things
Everything
change.
changes.
But you're not here tomorrow, so what fun would we have if we didn't call it today?
That's a good point. Maybe what the market needs is for me to take a break.
Yeah, well, you're going to be off for a week and a half, so we have a nice, healthy break for the market coming up for Matt Miller. But Elise, at this exact moment, at 10:19:25 a.m., we are on set for that record right now. And again, it's big tech that's leading the way.
I think if you look at the sectors today, it's pretty fascinating. The S&P 500, you actually have more sectors in the red than in the green, despite that volume you've been talking about. It is information technology, communication services, all higher. Staples and discretionary for consumers also higher on the day. I think it's interesting to see real estate as the worst performer on the day. We are seeing the 10-year behave under 4.6% generally, but between the small caps and real estate, it's telling you, isn't it, that these are levels that might still be a little too high in terms of what could really fuel some of that broadening.
I'll say, looking at that chart right now, I mean, good breadth, that broadening out, it's a nice to have. It's not a need to have. What you need to have is big tech to see this up market that we're currently enjoying right now. And you're certainly getting that today again with tech up about 2%, Matt Miller. At
I'm
least on the
scrolling back through the chat to find, because Terrell had posted the actual intraday high. I'm looking, I think it was 6,099 and change. We didn't quite make it to 6,100. But yeah, the broadening out is impressive. You see, I think now 63% of S&P 500 members are above their 200-day moving average.
Can I also point out some breaking news on the terminal, because we've been talking so much about how investors have been navigating this market. This is a down arrow story in a hedge fund universe that's been doing quite well. Breaking news, Baupost clients, this is Seth Klarman's Baupost, famous investor. They have pulled $7 billion since 2021 after poor returns. This was one of the best performing hedge funds, guys.
When?
It only gained about 4% a year since 2014.
That was one of the best performing?
Really?
When was it one of the best performing?
Yeah, for a while. Remember, it's been a while. Last year was a year where we saw Citadel, Millennium, D-Shaw up double digits, and also either returning money or asking clients if they want to take money back. And Citadel had so much interest that the clients didn't even want their money back. Well, so it's a big divergence to see this at Seth Klarman's fund.
It seems like this story in particular is a story about bad performance. Average annual return, let's just say that again, of 4% since 2014. It lost money in 3 of those years. We have a saying in the ETF world that flows follow performance. And I mean, you can apply that to basically any asset class, any wrapper, that if your returns are not good, then the money won't be that
Well,
good
maybe
either.
they could do what you're seeing a lot of people do in your industry, hedge fund managers filing for ETFs.
Well, that's a tough business because, again, you have to have the performance.
Right. And so maybe that's not going to be what brings the flows back. Back to the markets, guys. It's interesting because...
They've been a good performer.
Who?
The S&P 500.
Absolutely, and maybe the Nasdaq 100.
How many hedge funds outperform the S&P 500?
So
Just buying VU.
Shockingly few, it seems like.
Yeah, I
mean, what's the pitch? That you have diversified returns?
The
that
fascination
you're not correlated to the big benchmarks?
At these highs, the fascination here is that, yes, they want to buy more stocks, bonds, commodities, and pay 2 and 20 for these big money managers to do it in order to beat the market. Now, we're going to go back to the Bloomberg house at the World Economic Forum in Davos. Somebody who knows a little bit about money management, Blackrock CEO Larry Fink, sitting down with the CEO of G20 and Bloomberg's Francine Lacroix for a conversation about AI.
It felt like last year, 2 years ago, it was about talent, it was about the right chips, it was about the right technology, and now it's all about infrastructure. So you announced with Microsoft basically a $30 billion fund.
And that was just equity.
Right.
We'll raise another $100 billion in debt.
You're 100 of debt. Talk to me, Larry, about the rationale for this. I mean, infrastructure, if you don't have the right infrastructure, you can't be like a huge player in AI.
Well, hi, everyone. Look, we have great partners with G42 and MGX, but let me just talk about the concept. First of all, it is still about people.
Yep.
We don't have enough electricians in the world to fit the need in building out this infrastructure. 2, it is about national security. It has enormous geopolitical issues all around it. And we could talk about what the Biden administration announced last week related to the approvals that will be needed to have advanced technologies in different countries. So it has many geopolitical issues. But as fantastic our hyperscalers are, and the U.S. right now has the greatest technology platform in the world. We have 5 or 6 major companies that are in the cutting edge of technology. But as big as they are, as large as they are, some of them over $3 trillion of market cap, some of them have $70 billion of free cash flow. They don't have enough money to build this all out. And, I write about the whole evolution of the capital markets. And I believe this is going to be probably the first in our lifetimes where the capital markets, in terms of very strategic growth, is going to play a very large role. And I actually believe how the Trump administration is rolling out now, talking about making private sector capital more easy to invest by rolling off restrictions and regulation and permitting. And so the confluence of the capital markets, all the technology, all the innovation, and then you have to overlay all of that on sourcing power.
Right.
Because all of this is going to require this intersection of power, capital, and technology, all with the idea that it's going to be ultimately a big leveling for the world, elevating more people in the world, providing more access to information and technology. In the short run, it is going to be about bringing all those 3 segments together, and it's going to require an enormous amount of financing, and we are very excited about it. I know BlackRock could not do it alone, as large as we are. I don't believe MGX and G42, I'll let Peng talk about that, could do it alone. Also, Microsoft and NVIDIA could not do it alone. So it's a combination of bringing it all together. And we were excited to read in the papers about what Masa and Sam and Larry Ellison's doing on a similar project.
Yeah. Peng, can you talk to us about size and scope? Like, actually, I mean, when we talk about AI infrastructure, how big will it be? Where will it be? How much money will need to be deployed on this?
Sure. But first, let me start by saying this. Great partnership here. Global leading investor, and we are a very active builder of AI infrastructure. So globally today, we have about 60 gigawatt of data center capacity globally. In our conservative joint assessment, the world needs more than 200 gigawatt, potentially over 300 gigawatt. Of
Conservative?
Conservatively, yes. Both for training and inferencing purposes. Remember, to build a full-blown 1 gigawatt GB300 class data center, we're talking about $40 to $50 billion, 1 gigawatt.
That's one AI data center.
We call this AI factory. By the way, Larry didn't touch on one thing that's also equally important to power and chips. It's connectivity. Connecting the world with all of this. That's another massive investment required. So, as Larry said, no single company or even single government can do this by themselves. And this is why we're joining hands between different investors, builders, coming together under the umbrella of this global AI fund and to build this infrastructure on a global scale. So one example I'll give to you is in Abu Dhabi alone. Now, UAE is a nation of only 10 million people. But we look at our region, Middle East, we did our assessment. In UAE, to serve the region, we'll need a minimum 5 gigawatt of AI data center. And guess what? We're building that as we speak. So if UAE needs 5, just imagine other major centers around the world. So this is a massive undertaking. We have to do this in partnership.
And as I would say, as we sit here in Europe with very high energy costs, there is another idea of having the data centers occupy somewhere within the GCC with the sovereignty of an embassy.
Digital embassy.
Yeah.
Yes.
So it'll be a digital embassy. And so that could be a solution for parts of the world that have high cost energy or countries that have to import energy. So this is, as I'm saying, this represents a lot of geopolitical issues too, and some very large cooperation, which would be a good thing between governments.
So, Larry, let me ask you, are politicians aware of, are they taking this seriously, or is it really up to private companies to come up with the funds, deploy it, and get it done?
I don't think there's a conversation we're not having with any government that is part of the conversation is about what role can their country play within AI. Some of them have power and energy, and some of them don't. Some of them need water, some of them do. So it really depends on each and every country, but it is a conversation we're having in Asia. Throughout Asia, throughout Europe, and North America. So.
How does the Trump administration, second time around, change all of this? It feels like, they're putting crypto, they're putting AI really at the forefront of their administration.
Well, I hope so. I mean,
I think under Trump, the majority of the training workload for frontier models will remain on U.S. soil.
Absolutely.
And it should. It's very cutting-edge advanced capabilities U.S. should protect. But having a great model but not deploying it is no good. That's why we need partners from Abu Dhabi to Hong Kong to deploy inferencing infrastructure to serve those models to the global population. So this is why the partnership is so beautifully constructed. And Larry is very focused on investing primarily in the U.S. today to help the hyperscalers to build their next tier of frontier model. And we're much more focused on the global deployment of inferencing fleet of GPUs and infrastructure.
But Peng, from a builder-operator point of view, how much energy do you need for this? Are there new partners that you have to bring in?
Absolutely. We need a lot of energy partners to be able to make this a viable global undertaking.
And hopefully this raises a conversation about what role will nuclear play in the energy mix. I mean, I don't believe we have the available energy if it's going to be 300 gigawatts worldwide. Keep in mind, we have to service, it's very important. If you're going to be building a data center, the data center has to be good for the locality.
Yeah.
It can't be drawing power away from the average consumer. So therefore, it can't raise the prices of electricity or it's not going to work. And so in every case, you have to be working with the locality and the government, working together. In many cases, it's going to require, let's assume, just round it up, I need a gigawatt of power. We are going to have to source that power. We're not going to be tapping from the grid.
And if we do, Larry, if as investors and builders, we do take power off the grid, we have then commit to build additional capacity for the locality.
So that's why this triumvirate of power, data, and capital is all integrated.
It's like a triangle, but there's been a lot of talk about using renewable energy. Is now that out of the window because of the Trump administration?
I mean, by no means. I think every hyperscaler has long-term aspirations to be utilizing more and more renewables. But in the short run, let's be clear, it's going to be heavily powered by gas.
Natural gas
in the United States. It will be supplemented by renewables.
Yeah.
And as I said, hopefully it raises a whole conversation about the role of nuclear in the future. And it should be a conversation we're having today. Because we're going to need unless fusion actually works and we have new sources of power, we are going to work. If you think about a Monopoly game, the worst part of the Monopoly game is owning a utility, right? You never wanted to own a utility.
You want a bank.
No, you never want to. But these utilities now, these power companies, are really important now.
Absolutely.
And these utilities stocks were dragging and dragging and dragging for many years. And now they're all rallying considerably. They have to play a vital role in this conversation.
How important energy is, I'll give you one example. In the UAE, what we talk about, this formula of E equals MC squared, we actually change the formula to E equals to I. Energy equals intelligence. The more you can have that, the more compute you can deploy, the more intelligence you can generate.
I don't think in a Monopoly game you still want to own a utility, but
I mean, this could change in 2025.
Owner, you might want to own that.
We should have the Blackrock Monopoly edition.
Right.
Like no one's ever thought of that.
One more thing I would say is that our friend Elon loves to say this, nuclear fusion, we have it already right now, which is solar.
Yeah.
Solar energy is a form of derivative
of the fusion.
Nuclear fusion from the sun. We need to harvest that. We need to do a lot more of that.
In what time scale? Because this feels like such a massive project, and it's still quite theoretic, I think, in a lot of people's minds.
We had a meeting on this with a bunch of power companies at lunch today. And it depends on your time frame. If your time frame is 2 years, you have one answer. If your time frame is 5 years, you have another answer. If your time frame is 20 years, you have all different answers. And so it is about the immediacy, and that's some of the issue. Everybody is saying I don't think a country wants to be left behind right now. I don't think a hyperscaler wants to be left behind, or a technology firm wants to be left behind. So there's going to be a huge amount of capital deployed. Right. Now the question is, how do we ensure that the capital is deployed, that we get the proper return across the board, that we're focusing all the different issues. But in every conversation you have with anybody from the technology side, they're saying the speed in which these AI models are improving is accelerating, and that means the utilization is improving dramatically.
Absolutely.
I would just say one thing. When I look at different companies in different industries, and I always highlight Walmart, who's had an exceptional 18 months. And you talk to the leadership of Walmart, they believe so much of their performance has been driven by their utilization of AI right now. Mm-hmm. They have better information of their clients than most of their competitors. They have better inventory control using AI and intelligence. And it shows up in their financial results. And every company, I believe, is going to start utilizing that in a form. And so I think this is all going to be accelerating over the next 10 years.
But Peng, who do you think decides this timeline? So is it politicians? Is it the AI companies?
I think the market will decide that. Yeah. I think the demand.
Not Elon Musk.
That. Well, he's both the demand and the supply. And but on the demand side, seriously, I do believe we'll see significant uptick at these models. You heard from Dario earlier how smart these models are getting, and they are not just one. There are multiple frontier models very capable of PhD-level intelligence already. If you allow me to just slightly adjust topic a little bit, you mentioned crypto earlier. I think it's impossible to have a great conversation with Larry while talking about crypto. What you did with your ETF is incredible, truly incredible. And I actually believe crypto is a currency of AI. We spoke about earlier how soon enough all of us will have multiple agents, AI agents working for us. They're going to inform us, they're going to support us, they're going to make transactions on our behalf. So worldwide, there will be explosion of financial transactions 24/7. The traditional banks, the SWIFT system cannot support that. So crypto will play a bigger and bigger role in the age of AI.
But at the same time, we're going to digitize currencies very rapidly. And we've seen that in India and the great success of leveling in India because of that. And you're seeing the great success in Brazil. So there are two countries that are more advanced in these technology, in blockchain, than Europe and the United States right now. And that's India and Brazil. They had a need because of inflation, because of corruption. They needed to digitize their currency. And I do believe this is going to accelerate. And that's going to be the next frontier, using AI, using this. But crypto is going to play a big role. Digitization of currency, digitization of everything we're doing. I'm a big believer, and this is one thing that will change Bloomberg even. I believe we're going to be in the cutting edge of tokenizing bonds and stocks.
Coming.
And we have the technology now. The fact that we are now moving forward in tokenization, every bond and stock, is crazy. Yeah. We should be moving towards that frontier. Obviously, there's winners and losers and all that, but we need to be prepared for the tokenization. And it would democratize more finance if we tokenized bonds and
Absolutely.
stocks.
By the way, that drives more compute need as well.
Yeah, my bosses already expect me to be at least 20% more productive with AI. So it's going to be a fun
only 20%.
run. Only maybe 25, especially in Davos. Talk to me a little bit about what you're expecting the Trump administration to do for crypto specifically. I mean,
I think it's already very well articulated. They've fully embraced crypto as a new, not just financial system, reform technology, but a new economic driver. I believe they have a thesis that to extend the dominance of US dollars, they'll be launching very powerful stablecoins to promote broader adoption and usage of US dollars. I think this will be a fundamental strategy for the Trump administration.
So, I mean, I look at it from the Blackrock has been built on the entirety of hope. I mean, most of the money that we manage is retirement savings. So you ask yourself, why on earth would anybody invest for a 30-year outcome, or 40-year outcome of retirement, unless they're hopeful that in 30 or 40 years, the world's better? And so the whole foundation of what we have done is a foundation of hope. And we try to promote that concept of hope and get more people to get their money out of a bank account and invest for the long term, right? Okay, and that's what we try to do. As I became a student of crypto, it was very clear to me that crypto is a currency of fear. And that's okay.
To some extent.
Yeah, but that's okay. Yeah. Because if you're frightened of your debasement of your currency, or you're frightened of your economic or political stability of your country, you could have an internationally based instrument called Bitcoin that will overcome those local fears. And so I'm a big believer in the utilization of that as an instrument. And so if that becomes true, and you see that it could be a proper hedge against maybe hope securities or equities. Yeah. The question is, could you see a 2 or 5% allocation? I was with a sovereign wealth fund during this week, and that was the conversation. Should we have a 2% allocation? Should we have a 5% allocation? If everybody adopted that conversation, it would be 500,000, 600,000, 700,000 per Bitcoin.
But does it also?
I'm not promoting that, by the way. So that is not my promotion.
Larry, if you allow me, Bitcoin is just one use case of blockchain.
Yes.
Right? Blockchain is a general purpose technology. It's just like AI. So with blockchain, you can have paperless contracts. You have seamless transactions.
Well, that's what you would do in stocks and bonds.
Exactly, tokenization. And one more thing I'll mention, if you allow me, Larry, is again, the convergence of blockchain and AI. Now, with AI, you can expect within this year, we're going to see deep fake so real, you cannot tell the difference. People watching this on live stream, they will not know what's in here.
We're not here.
We're having dinner somewhere else. So to counter that, you need some form of digital watermark. Mm-hmm. that is actually a cryptographic evidence
that you're
this
real.
is real.
Yeah.
It's my signature, his signature.
Who puts that? The tech companies? By the way, they're so excited at the back. They're trading crypto on the back of these comments.
It's all your fault. No, we control our private key. It's going to be
It'll be personal.
We'll have control.
It's going to be like your irises, your fingerprints. It'll be a digital.
But it's stored on blockchain.
Yeah. And
witnessed by the global population.
Everybody knows.
Cannot be faked.
Yeah. But does this change everything for just capital markets?
It will. Yeah. I mean, my gosh, if we could tokenize bonds and stocks tomorrow, one of the great things that Blackrock is being accused of is how much vote we have. I wouldn't vote anymore because we would be able, through tokenization, to know the owner of record instantaneous, and each owner of record will do their proxy voting. I would love that outcome. No, but it would democratize investing in all ways that we can't imagine.
Even political systems, how you vote in a country can be changed by that.
And do you think that, again, the Trump administration will accelerate that?
I think they're moving that direction. How far they actually will go remains to be seen.
But if you do have a digital validator, like your fingerprints or your irises, I mean, you could tokenize voting. You could do everything. And so it will change how we think and how we live and what we do. And
we've been talking to some Southeast Asian governments, including Malaysia, Thailand, Philippines, Indonesia. All of them historically have the populations who are trading black market Bitcoins and what have you. But now the governments are realizing U.S. is driving a global policy shift. So they're now doing something very clever. They're saying, you know what, we're going to issue a new form of digital ID to every single citizen. Along with that is a digital wallet.
Which
Brazil
and India has already done.
You're both so fired up about this, and you're so excited about it. I'm going to ask you what you worry about in the next 12 months. Is it that something goes wrong with the inflation, or is this that some of this gets into the wrong hands?
Well, let's say cyber risk is ever present, and the amount of money that we're going to all have to make sure we're protecting, and we give a surety. And we give strength around the value of your digital identity. So all of that that's the foundation of any order. And so let's be clear, the amount of time and effort and money to authenticating everything is real. And so if there is something that breaks down that authentication, then we have a timeout. The biggest risk we have worldwide today is the world believes we are past the high point in inflation, and I could see real realities of elevated inflation. I know that is not the market forces are saying at the moment, but I could truly see a scenario where we are going to have elevated inflation. We would have a higher 10-year Treasury, and obviously the bond market. That's why I love the capital market. We're going to find that out. The bond market is the ultimate tester every moment in the market of what's happening globally, and so we'll see. But there is not a low probability. I mean, not below 50%, but there is a probability that we could see elevated inflation again, which would be creating an elevated 10-year Treasury, which changes a lot of the conversations.
And this is because of an overheating U.S. economy.
That's a possibility, or I mean, look, I'm here in Europe, and I've never seen such pessimism. So I'm going to leave. I was the one who's normally pessimistic about it, and I'm actually relatively optimistic now because it's so bad. That's so I would, always do what. Always go against Davos, and you'll make a lot of money. So, the pessimism is so tangible about Europe. It almost feels like it's a nice counter trade.
A good entry point. Peng, what about U.S. restrictions on semiconductor technology? Do you expect that to change? This has been an issue, frankly.
Yeah, I think the Biden administration left a very difficult executive order on the desk of Trump, where really we discussed this already, speaking very frankly here, was a gift for another country, to China. That is, if you do not supply the necessary baseline technology to your allied nations, to your friends, guess who doesn't call? They're going to call somebody else, because people cannot live without AI, without infrastructure. So I think there has to be a balance, what to restrict and what to share, and ultimately work with folks like us to build this global coalition.
And that's the geopolitical issues that I referenced in my opening. It's larger than that's in the ether at the moment.
Peng, are there active conversations that you know of either trying to restrict or, and you're optimistic about the outcome?
I'm very optimistic that the next 4 years will bring a lot of positive changes.
Okay. Well, thank you both for joining us for a good conversation around the world.
Thank you so much.
And that was BlackRock CEO Larry Fink and the CEO of G20 speaking with Bloomberg's Francine Lacroix in Davos. And it was a wide-ranging conversation, you guys, on AI and crypto. We got there too, but
it honestly felt like a couple of crypto bros did a J and talked about, wow, how amazing tokenization is going to be 10 years ago.
Let's taking a drink every time that blockchain was mentioned. I think we're at least at 20, but some interesting comments towards the end from Larry Fink, of course, talking about the biggest risk that he sees in the world right now is people thinking we're past the high point of inflation. He also said that everyone on top of that mountain feeling a little bit pessimistic right now, Europeans seeing a lot of doom and gloom, and that maybe he would take the other side of that.
Can I talk about some numbers that I actually thought were kind of interesting in the scope of the conversation? They were talking about the need for 200 to 300 gigawatts of investment needed here to power these AI factories. That's $40 to $50 billion for 1 gigawatt of investment. Times that by 300, you get $10 to $15 trillion you're going to need to start powering these AI factories. And so you could see why that AI trade is taking off. This idea of partnerships, guys, I do think is interesting in this era. One thing a source had told me a long time ago, a couple months ago, was that you're going to need to start to tap the Middle East more and more for some of that energy source you need for now, again, this AI need in the United States. So this whole idea of deglobalization doesn't really stand in the Trump era if you think about that investment needed.
Yeah, that seems like a lot of money. I think someone needs to redo those calculations because that is too much, right? Even Moody's says it's going to be only $2 trillion over the next 5 years, and Bloomberg estimates it's going to be $1 trillion.
We did get some news while that panel was underway. This coming out of Stellantis, which I thought was really interesting. We were talking yesterday about the potential tariffs on Canada, what that would mean for the auto industry in the U.S., given how linked the North American auto industry is. Stellantis Investments returns 1,500 jobs to their Illinois plant. They're going to produce their new mid-size pickup in Illinois, and they're going to build their next gen Dodge Durango at their Detroit complex.
Yeah, I'd be interested to know what the next-gen Dodge Durango looks like. Is that electrified? Is it a hybrid? Hopefully the latter
we know that
for
the Trump administration
investors in Stellantis.
On EVs.
No, and consumers really not that hot on EVs either.
Very true.
It's interesting to see Olaf Scholz in Germany wants to really push ahead, obviously, because they've invested, Volkswagen, Daimler, and BMW, so much in electrification. But, yeah, this is interesting. You know, they're also pulling their production down from Canada into the U.S., Illinois, Ohio, and Michigan. Let's get back to the Bloomberg House at the World Economic Forum in Davos, where Bloomberg's Brad Stone is sitting down with the CEO of Salesforce, Marc Benioff.
Which is, of course, President Trump. You have been understandably supportive and optimistic of the new administration, but I wonder how you kind of rate the week one executive orders, the tariffs on Mexico, Canada, and China, shutting federal DEI efforts, pardoning the January 6 protesters, ending EV subsidies. How are you evaluating things so far?
Well, I think that, you know, we can really evaluate that the current administration and what's going to happen by what we saw with Trump 1, which is that a lot of the things at the beginning are not exactly where we're going to be in 6 months or a year. So, you know, I'm very positive. I'm just looking forward to seeing what's going to happen. And, you know, it's a new day. And it's an exciting moment. I mean, I can't somehow get off my phone. It seems like there's another news story. I don't know how you're feeling, but I feel like every minute there's some new thing that I don't even know about. Like, well, you just told me like 20 things I don't even know.
And that is the Trumpian.
Hey, what do you think about this? I don't know. Jesus, like, get my phone back to me.
We'll keep doing that. I don't know if it was yesterday or today. Davos kind of messes with your perception of time, but Trump appeared with Sam Altman, Masayoshi Son, and your mentor Larry Ellison to announce Project Stargate. Tremendous branding there. And the number bandied about, I guess, was $500 billion. It's unclear whether that's real or not, to build new data centers and sources of energy to support the next generation of AI and U.S. competitiveness. How are you reading the practicalities of that alliance and the project?
Well, I think the big news is that OpenAI is moving off of Microsoft, so you can see the real. Are
you being facetious?
No, you can see that this is a break with Microsoft. So Microsoft's not involved. This is the first time that OpenAI is moving into a non-Microsoft data center. This is really the result, I think, of Microsoft hiring Mustafa Suleyman and starting to build their own large language models, which I expect will compete with OpenAI very aggressively. And I think it's the end of the. This is the end of the OpenAI.
A real
Microsoft
break in the alliance that was first forged. It almost put OpenAI on the map when Microsoft made a big investment.
You really saw it here last year, even before Microsoft hired Mustafa Suleyman, who's an incredible computer scientist, as you know, is the lineage of Google, Inflection, now Microsoft. Sam and Mustafa were not getting along well on panels that they were on here at Davos. You can go back and see that. I remember one specific panel that I was in, and it was thought they were going to come to blows, but it didn't happen.
And so, has Larry Ellison and Oracle, you think, stepped in as a technology partner or a source of funding for OpenAI?
I can't speak to those specifics, but what I can tell you is that I think it's a big moment in the history of OpenAI that they're not running on a Microsoft data center.
And how does it impact, I guess, Microsoft's competitiveness on AI going forward? We'll talk about Copilot and the like, but do you feel like, because of these developments, Satya and Microsoft are in an unfavorable strategic position?
Well, I think, as you know, Microsoft doesn't have today their own frontier model. So they rely on OpenAI, and now OpenAI is saying that they're going to another data center structure. So it's a big moment.
Right. And to just close the loop on Stargate, part of this is obviously driven by national security concerns and the idea that, that it is vitally important for the U.S. to maintain this lead. I mean, do you share the concern and the urgency? And do you think China is close to AI parity?
Well, you have 6 questions in there, Brad? Let's kind of peel it apart one by one. I think that we're just seeing a incredible amount of investment in AI overall, which is because it's really exciting. You look at what's happening here at the conference I just showed you. That Salesforce has run the information management for the World Economic Forum for more than a decade. So everything that's happening here is running on Salesforce, and we've used our Einstein platform here for years, but this is the year that we're using Agentforce. So now you have an agent that's front-ended your app.
You should probably define what that is.
Okay, well, what it is you have the ability now to use an agent, a kind of almost like a digital worker, to help you to kind of get your job done. So here I am, I have my app, I'm on my phone, I'm normally just bringing up my World Economic Forum app, I'm going through trying to find all my sessions, when is Brad speaking, how do I know Brad, can I contact Brad? Instead, now I can just say to the agent, hey, when is Brad speaking, and will you contact him for me and help me make this happen? At Salesforce, we just deployed our Agentforce technology on help.salesforce.com, which is how we deliver help to our customers. 36,000 customers a week come to help.salesforce.com. If you had come there a month or so ago, about 10,000 of those customers have to move off and get support from human beings, and about 26,000